Apple may be trying to make up ground on AI technology. The Wall Street Journal reports that the company is in talks with Meta about potentially integrating Meta's AI model into Apple Intelligence. Let's bring in CBS News senior business and tech correspondent Jolene Kent. Jolene, Apple and Meta, they're longtime rivals. What would Meta get out of this sharing deal?
Well, it would get a lot more exposure. Obviously, millions of iPhones are sold globally every single year. Apple has made a huge pitch to its consumers, saying it's going to roll out AI in its iPhones across the board. They're calling it Apple Intelligence, but they do say that for the tasks that are more complicated, they will be using outside companies. And we saw that in the announcement not too long ago with the partnership with OpenAI. And the company, Apple, made it really clear at that announcement that, look, they don't expect to rely just on OpenAI. And so now we are seeing these Wall Street Journal reports about a possible partnership with Meta. So Meta stands to get a lot of exposure. In fact, if you look at the reach of it, the launch of Apple Intelligence with OpenAI itself is expected to double the exposure of ChatGPT, according to Gene Munster, the analyst. And so if you look at that alone, you could see why Meta and Mark Zuckerberg want a piece of this game.
Wow. So how soon could something like this roll out, and how would the user experience change?
Yeah, well, it's important to cite the Wall Street Journal in this as saying these talks are still very much in progress. The deal is not done. It could very well fall through, as many of these partnerships do at this stage of the game. But it could roll out, sometime in the future. In the case of the OpenAI and Apple partnership, we expect to see that roll out later this fall when that big software update comes through. But for right now, it looks like Apple really is seriously investing in AI, not just with Apple Intelligence, but also with other companies to kind of figure out what customers want. And aside from a ChatGPT, there's been very little sort of direct to consumer, direct to regular iPhone user AI usage day to day. So, of course, Apple taking a step into this game a little later than some of those earlier players, but they expect to be able to do what they do, which is the Apple style of coming in a little bit later, figuring out the market, assessing what's already been done, seeing what other mistakes have been out there. And it's also important to point out that other companies are also talking to Apple, other AI companies, according to their journal. We're talking about Perplexity and Anthropic as well.
It seems like Apple's AI ambitions are so grand that the company is considering teaming up with one of its biggest rivals, Meta, on new AI developments for its products. Apple leads the smartphone market with its iPhones, and it's now looking to capitalize on the growing AI smartphone market as well, with this proposed partnership and its own deal with OpenAI for Apple Intelligence. One of the most bullish Wall Street analysts on Apple stock is Wedbush Securities' Dan Ives, who views Apple's AI partnerships and developments as its ticket to a $4 trillion valuation by next year. So, let's hear what he had to say and talk about whether now is the time to buy Apple stock. But before we get into today's video, if you want to keep up with Apple's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Sticking with Apple, our next guest believes the AI-driven supercycle is about to get underway for the mega-cap giant. Joining us to discuss, Dan Ives is Managing Director of Equity Research at Wedbush. It's good to see you.
Great to be here.
So a lot of things going on to sort of unpack there. But I guess before we jump into the supercycle, what do you make of these two specific events? Number one, the issues in Europe. Number two, the partnership with Meta.
Europe, it's like getting a cappuccino for Apple in terms of these fines. So I don't really view it.
10% of revenue is a cappuccino.
but realistically,
what's going to happen?
We're talking probably maybe $1 billion or $2 billion in terms of what they're going to have to pay. And I think the stock's telling you that, I think for Apple right now, they're at the top of the mountain because it's their castle. And we could have the EU issue and a lot of regulatory, and that's going to continue to be something that we see in the U.S. as well. But right now, they play chess. Others play checkers in terms of where they ultimately own the Apple ecosystem.
So what about the EU's claims? Do you think they are more legitimate than not? In other words, is Apple restricting or otherwise impeding individuals from leaving its app store and going to other providers.
Yeah, and I think Cook's talked about that. I think there is a plan where they could have some business model tweaks. But just like we've seen with the Epic lawsuit and ultimately what we'll see with some of the issues in the Beltway, I mean, Apple, it's a tight wire act that they're trying to walk, but it's their business model. They're going to continue to defend that, and they're not ultimately going to give in to the EU. They'll tweak around that. And I think the important thing here is that this is their ecosystem. The golden install base of Apple is not changing. And now you look at AI, the reason that Red phone's ringing and it's Zuckerberg on the other end, because for Cook, they recognize now Apple Intelligence, they have the keys to the castle. And I think, in our opinion,
Apple does.
Apple does.
Apple does, because they have the installed platforms, the installed base.
Well, they have 2.2 billion iOS devices. They have the App Store. So any developer, me and you, decide that we want to build an app, where are we building it?
Dan Ives thinks that Apple could lead the upcoming phase of the AI revolution, and he even suggests that Apple's CEO, Tim Cook, could emerge as a pivotal figure akin to NVIDIA's CEO Jensen Huang, whom he often refers to as the godfather of AI. Earlier this month, Apple unveiled a number of new AI-powered features at its Worldwide Developers Conference, leading many Wall Street analysts to raise their price targets on Apple stock, highlighting the company's massive active installed base of more than 2.2 billion iOS devices. Ives is one of those analysts, as he recently said that he believes that Apple's installed base, combined with its App Store dominance, is worth between $30 and $40 per share alone. He also added that a year from now, investors should expect Apple's market cap to hit $4 trillion. About the Meta partnership, Dan Ives believes that Apple stock is on its way to reach $300 per share, as more and more companies get into partnerships with Apple to try to integrate their AI tools into iPhones, iPads, and all of Apple's other devices. Ives' $300 price target implies an upside of around 45% from where the stock is currently trading. But will Apple stock really see this boost in the future? Let's find out. Hello, everyone, and welcome back to Investocracy.
I think that's worth $30 to $40 per share, and this is the start of a renaissance of growth. I still think the street is underestimating this. A year from now, I think we're looking at a $4 trillion market cap for Apple.
So why do you think the phone is ringing again, kind of as it relates to Meta and Mark Zuckerberg? So let's kind of remind me where Meta stands. They've developed Llama. They have, leaned into AI, but in terms of its applications, it's seeing what? That its LLM is just valuable enough to plug into Apple's devices, or what exactly is the strategic move here?
Because the golden goose for them is that they want to get into Apple Intelligence. They want to get into this Apple layer where, just like what ChatGPT, what OpenAI did, I mean, they're at the top in terms of, for consumers, you got 1.5 billion.
But because
iPhones.
It would point back to Meta's products, or because they simply want to ultimately one day maybe be able to monetize that relationship?
Because that's going to be a highway for consumers to go back into their ecosystem in terms of Meta, and that's just more monetization, more engagement. Because right now, you're on the outside of this party that Apple is really going to run. And when you think about the AI revolution, where we are, it's still, despite Self and NVIDIA, it's 9 p.m. in an AI party that we see going to 4 a.m.
The recent boost that Apple stock saw was certainly a welcome change for investors, because through nearly half the year, it seemed like Apple couldn't do anything right. This is because the company's sales were slumping, and many criticized it for seemingly having no AI strategy, when all of its Magnificent Seven peers were betting big on AI. Additionally, iPhone sales, from which Apple derives half its annual revenue, was a big issue as the company lost market share in China, one of its biggest markets. So, it's no surprise that Apple stock was in the red in Q1, and even legendary investor Warren Buffett trimmed his position in the company. The stock is now gaining, up 12% year to date, and analysts are again singing its praises, all because of AI. Unlike companies like NVIDIA, Apple is bringing AI directly to the consumer rather than to enterprises, which is why analysts are saying that Apple is taking the right approach, as the new AI features are likely to convince its more than 1 billion users to upgrade to the next generation of iPhones. The new AI features will only be available on the latest iPhones, starting with the iPhone 15 Pro, as well as future models. And this means that consumers will need to upgrade to get the benefits. And if this drives up iPhone sales, Apple stock will definitely see a boost. But beyond the AI strategy, which has proven to be a massive catalyst for Apple stock, the company and its share price are also benefiting from other good news that has been made public in recent weeks, including the news of this rumored partnership with Meta. However, there is more news that we're going to go over right now. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So Apple's in focus today, Renee. They pulled back yesterday, but we've got some bullish sentiment around this, right?
Absolutely, and coming primarily from Bernstein this morning, who boosted its price target on Apple to $240 from $195 and kept it at an outperform rating. Now, this analyst notes how Apple has outperformed the S&P 500 since second quarter earnings, not the full year, but since second quarter earnings. And that includes a substantial gain after the Worldwide Developers Conference happened on June 10th. And the analyst believes that shares are no longer inexpensive versus what they have been in recent history. The primary reason, Bernstein believes, is these investors being incredibly enthusiastic about Apple being an AI leader now. A lot of times, or a lot over the past few months, we wondered what was Apple's AI play. And now that we have it, these investors believe that Apple can actually become an AI leader. In fact, Bernstein said that it's increasingly convinced that Apple will be an AI beneficiary. I don't know to the degree of NVIDIA or not, but certainly so. It sees risk, however, over at Bernstein that the benefits could actually take longer to materialize than some bulls appear to believe. Why? Because many of the features for Apple's Apple Intelligence rolling out of the next year, they're only going to be in English. They'll only work in English, and that potentially shuts out a huge market and potentially pushes out some upgraders to the iPhone 17 cycle. That's the word from Bernstein this morning, but still bullish on this stock, keeping it at an outperform rating and boosting the price target. Diane.
According to some recent reports, Japanese electronic parts maker TDK, which is a major battery supplier to Apple, has achieved a breakthrough in the development of long-lasting solid-state batteries. TDK said that its new solid-state batteries are likely to lead to higher performance for wearable electronic devices such as the Apple Watch and AirPods, and views them as a game-changing technology that could revolutionize consumer electronics. So, if Apple manages to get its hands on this new technology, which is very likely since TDK already supplies Apple, the iPhone maker's products will see massive performance improvements, which could boost the company's sales. Additionally, Apple is making some positive moves regarding its newest consumer electronic device, the Vision Pro headset. At its developers conference, Apple said that it plans to launch the Vision Pro in 8 additional countries this year. Also, some new media reports say that Apple plans to release a cheaper version of its Vision Pro device with fewer features by the end of 2025, and analysts rejoiced at this, saying that a less expensive model will help drive sales. This becomes especially true when you consider that the Vision Pro's current entry price is $3,500, which has proven to be a barrier for many consumers. It seems like Apple is taking multiple steps in the right direction to improve its business and boost its stock. As a result of these efforts, investment firm Wedbush Securities forecasts that AI features would create an additional monetization opportunity for the company's services business, and estimates that Apple's upcoming AI-enabled smartphone could drive a solid upgrade cycle. Still, investors should keep in mind that just a little more than a month ago, the company was being written off by a good number of investors and analysts. Therefore, Apple's current run might die out if the company fails to deliver on its AI promises, so execution is key here. If you're an investor who believes that Apple can pull off its AI strategy and use it to generate more partnerships with leading AI companies like Meta, OpenAI, and Google, then it might be a good idea for you to buy Apple stock now, and the same goes for holding Apple shares if you already own some. So, what do you think about Apple stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Apple is. If you would like to know what companies like Apple have been up to these past few days, go ahead and click on the next video on your screen. See you there.